We're going to get to why Carlyle and what are you doing there in a second. But because I have you, I have to ask about macro, the move we've seen in oil. I know copper's down today, but still we've seen a tremendous move in the last 2 months. What do you make of the commodity rally? Supply or demand or both or what?
It's a classic late cycle commodity price rally. You know, as I said back in, it was the beginning of the year, I made the point, being short oil and commodities in a late cycle expansion is like being short natural gas in a blizzard. Don't do it. A couple of things that I just want to point out. Let's start with the U.S. The U.S. is running a 6% fiscal deficit, the largest deficit ever ran in history in a peacetime non-recessionary environment. And think about this. If they do it in a recession, it's because it's providing, let's say, unemployment insurance. They're doing it full employment, red-hot economy, and they're turbocharging an environment that is already being stressed. That's why Bitcoin and commodities are the two best performing asset classes out there.
So let's layer it in. What if we get Fed cuts in the next few months? Are we turbocharging here?
The upside here is significant. Then let's put on top of that what China is doing. They have their Cash for Clunkers program, plus they're stimulating everything from EVs to batteries, solar plant panels. Why? Because they're trying to boost manufacturing to offset the weakness in property. So you have a really strong China, and you can see that in the PPIs. They're crushing their margin, but PPIs are going up. And then finally, let's turn to Europe. Remember that great destocking we were talking about last year? Well, they're restocking now. And so all of that points to a much more positive commodity price environment. Again, your late cycle expansion is when you want to be long commodities.
Do you have a favorite?
I always like oil and copper.
Actually,
copper is the one I really like, and the reason why. Not only is it part of the energy transition story, but what is AI? AI is chips and copper. You need copper to get the AI going. So how are you going to power all those chips? You need the electricity and you need copper.
Yep, exactly. Electricity. That's a big talk here in Houston as well. So, okay, so you like copper. You always like the oil. You always like oil. Just one more quick thing on oil. What's the upside, do you think? If we're in sort of a range, it's going to be a volatile range. Is the upside 100? Is it triple digits? Is it really 90? What is it?
Oh, let me ask you this. All the strength you've seen recently, and the consensus range is 70 to 90. Do you really want to be short $2.50 from here? Probably not. So I think we're going to see it bust well outside of that 70-90 range. I don't want to speculate how high we go. It's not my job anymore these days.
It's true.
But I think, the risk is clearly the upside. I think the main point is I want to be long oil and the rest of the commodity complex in this environment.
Okay, so let's get to the new job. So you basically went from 200, I know you live in London, but 200 West to 1 Vanderbilt. This is a big move for you. I mean, Goldman's...
1 St. James Market in
Okay,
London,
fair enough. There's still the one there.
Yeah.
Why'd you make the move? What is it about Carlyle?
Well, let's start. It's an iconic franchise. They were the pioneers in private equity. And if you want to have a voice and a seat at the table in energy transition, you need to be at a platform like that. Second, and do not underestimate the importance of this, is the Washington connection. Energy transition is a policy initiative. And being in the center of policy, given that policy and the market nexus, those are together is going to be what solves climate change. Carlyle is very well positioned for that. And then third, it's a world-class energy franchise. They kept the brown and the green together, put them together long ago when it wasn't fashionable, stayed the course. They're committed to energy. Also, they have experience in critical minerals. And without the copper, as we were just saying, you don't have energy transition. So bottom line, it was the best place I could possibly go to be involved in the energy transition and have a voice.
So what does a transition mean for Carlyle? Like is it brown to green? Is it you keep some brown, you keep some green, do you green brown? Like what color spectrum are we looking at?
I think to answer that question, let's go back to the observation. The transition is uncoordinated and messy. I don't think I'm using a term, it's bottom line. It's running into a lot of issues. It's just inherently going to be messy. So active management is the only answer. And when I say active management, it's not actively managing green by itself, because that's not managing the transition. You got to manage both the brown and the green together and the pathway between the brown and the green. And it requires knowledge of both. I'd like to point out a heart surgeon does not know about the heart, they know about the body and how the heart and the body relate. And I think the same applies here. The second is transition risk. There's going to be many pathways between the brown and the green. And those are all the uncertainties that the market's facing. Uncertainty in price volatility, uncertainty in greenflation, technology risk, policy risk, and owning both of them hedge that risk. And then finally, I want to make the point that divestiture does not solve the problem. If you take emissions, take them out of the portfolio, they don't go away. They go to places like China, Indonesia, India, which are burning records amounts of coal right now. It's like I say, by owning the emissions, you control the emissions. And I think by putting the two together is really critical in terms of creating a new pathway to solve climate change and the energy transition.
Do you think it's going to be traditional energy and oil companies that we're so familiar with sort of putting their money into new things and new technology, or about making their operation greener? Or is it going to be about like that cool new small clean tech company that we're going to invest in?
It has to be both.
Okay.
Again, I like to point out, it's in our DNA. We know how to solve these problems. We did it with the war on acid rain. And it's like, one of the big, Russian producers of platinum and palladium said in the 1970s, did we know putting platinum and palladium into an exhaust pipe would solve the aerosol problem? Back in 1965 or 70, no, you had to try it. And I think that by trying all those different pathways, eventually we will discover the pathway. So I don't want to say there's one group that does it. Also, take the catalytic converter. It was BASF and Engelhart that solved a lot of these problems back in the, when the war on acid rain. So I think there's going to be a lot to be discovered and learned as we try those different pathways, and that's part of the experimental process.
So will all of this wind up being inflationary in the medium term, or are we going to see sort of higher forever commodity prices, or is it going to be sort of really volatile commodity prices? What's going to be the result of that?
Volatility. I mean, we saw
like natural gas.
Yes, yeah, exactly. It does not have the flexibility to rebalance itself. So we go from 10, 12 to 18 months ago, to $1.25 or $1.30, wherever the lower, back to 175. But that's the type of volatility we're going to be in for. And that volatility needs to be hedged. And again, when we think about owning the brown and the green, you think about when oil prices go higher, interest rates go up, higher interest rates hurts the green. Now think about when oil prices go down, interest rates go down, the green goes up as the oil goes down. So owning both the green and the brown together gives you that hedge against these types of uncertainties.
Do you think that political risk is a big one? And I'm really talking about the elections in the U.S.
Yeah.
And in that, has the ship left the channel? Like, are people and asset managers and energy companies already investing regardless of policy, or is policy a key moment to make this transition?
I think it's going to be a lot of give and take from the green side to the brown side,
it's
right?
Both. It's both.
You have to actually have both. And I don't want to take a strong view here what happens in the immediate term, but I think right now we've seen that the brown push ahead more recently. As I like to point out, 3 years ago everybody was green, green, green here at CERAWeek. This week, they're all questioning it. The reality of the truth is somewhere in between, and I think that right now we're on one extreme. It's going to move back to the center again. But again, I'm going to go back to the emphasizing owning both hedges that kind of risk.
Do you think that what's the return profile that we should be expecting for energy transition projects? I know that's a hugely broad thing, but there was a lot of criticism that, you're going to have wind projects, they're only going to return 5 to 7%. We need high teens like we see for oil returns. What do you think this is going to evolve to be in a volatile commodity environment? Well,
ultimately, when we think about these returns, the way I like to think about it, the brown gives you the cash flow today.
Okay.
And the green is going to give you the cash flow tomorrow. Think about the green as being a long duration asset, like unprofitable tech or put it crypto, anything that is a long duration type instrument. While the oil, by owning both of them, you're going to be in those different environments. So I can't say that there's going to be an explicit return today. The one thing I do know is owning cash flow today, balance against owning that longer duration asset, gives you that flexibility and that balance to get a stable long-range return. Because what we find, the green does great in a recession when interest rates are low. The oil does great in an environment like right now when you're late side expansion. Own both across the entire cycle, you're going to be okay.